Hello folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what might it tell us about tomorrow. I do the show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern Time here on the base of the beautiful Rocky Mountains. Folks, it was a day of reckoning. Today we had the market, and actually we thought it would happen this week. We talked about it last night, and that is that we thought we would get some sort of indication as to what this market really wanted to do. And today we started to see that. And what was it? Well, it was that it cannot get above these resistance zones. If we look at the numbers, we had the Dow Jones down 64, 14,947. We're back under 15 again. The S&P's down 6 3/4, 1656 3/4. The composite basically flat, 3657.5. The NDX lost 2, 3122.5, and the Russell was flat, 1038.5. So why do I say, it looks pretty flat, right? Not much happened there in terms of what kind of action we got. But what we should be looking at is not what transpired in terms of, were we flat on the day or slightly down. Well, what did the test look like? How did we test on these various indexes, and what does it tell us in terms about what's coming? And so if I look at the S&P 500, we moved up. We almost got into the resistance zone. The high today was 1669. The lows that we were trying to get back into were 1671. Volume there 30.8. Volume here 24.3. We're coming back up. We're coming into resistance. We don't have the volume. We just do not have enough buyers willing to pay up on this bounce to take it higher. With that being the case, the situation from my perspective is what I thought might happen, and that is that we're setting up ABCDs down. I didn't get a chance to calculate them, so let's calculate this one on the fly together. 1, 2, 3, so it'd be from here down at 17. So 170018 coming down into this low 1639.43, and now we've got a C point here today 1669.51, and that takes us down to 1610. 1610 will bring you down into swing point lows. Last night we talked about if we didn't get much of a bounce, and so far we haven't, then what we're going to see is we're going to see a deeper move to the downside, right? Instead of getting support here, we're going to cut deeper and get almost to the swing point lows, and that's not only on the indexes, that's going to be true on the sectors as well. Every one of them failed as they went into resistance today. Here's the S&P failing. Let's pop over. I don't think there even was a test on the Dow. The Dow has been so weak it can't even lift. There's nothing even to test at this point. So the Dow just simply Dow's driven by everything else right now, and it's got the industrials in it, and and even though it's not the best measure of industrials anymore, it's still the measure, and that measure is, hey, we broke swing point highs. We came down. We can't even get back up to retest. Forget retesting the swing point lows that we broke. They're way up here. The Dow is a sick dog. Let's go over to the NDX though, because the NDX has been the strength. Last Friday, remember, we got the nice push up as a result of Microsoft. Today, it tries to get to the top to test it. That top 16.4 on it, we did 14, so we're doing less volume. That high was 31.49. We got to 31.47, almost 31.48, doing less volume. So you didn't get a full test, but you can see how you close. That's an ugly candle. That thing is a failure. It's not failure in the neoclassical sense of actually having the test, right? And because we don't have a resistance zone up there, there wasn't enough up there to make one, we come back and you know, it is an attempt to get higher, and you can't get higher. Let's look at the NASDAQ and see if the NASDAQ gives us anything different. I think it just got the resistance. So here you actually have some zones. 3691 is the bottom of that zone. We got the 3684. Volume back up is 14 going into 16.4. That's also a failure trying to get into resistance. You're doing less volume. You flip around, you close back under Friday's lows, Friday's highs. That looks like a failure to me. Let's see if the Russell got back over into the gap. I believe it did today, yeah. So it got into the gap, which was resistance. The high over here, the gap down, the high of the gap down bar on the gap itself, 1039.10. We closed at 1038.47. We did 243 into 342. That is about as clean of a failure as you can get. That baby wants to come back. So if I look at all the indexes are all saying exactly the same thing, and that thing is we're going to try to work lower. Now if we go to the sectors, it's pretty much the same story. I flipped through these right before I came on air to check them out. We can start with the IYT. On the IYT, we've got push into resistance, and that resistance was really this bar. So you got two of them. You got the bottom here, you got the high there. The volume is on this one, 509. You came into it doing 244. You go into it, you close underneath it. That's a failure. SOX. And you're going to see this right across the board, every one of them. The SOX couldn't even get up there. It was testing this little resistance zone, was right at it, and it failed right there. It couldn't go anywhere. XLB. XLB now was one of the strongest ones recently. It tried to get all the way back to the top. Remember, the XLB failed at the top. It had okay volume, failed at the top, came back on no volume, tried to flip back around on the weekly. Here on the daily, you go into resistance, you fell. Let's see, volume was 5.6, and the big bar you were testing into was 7.3. That's a failure. And right down the board here, I think we're going to see it on almost every one of them. XLE goes into resistance zone. You can see the resistance zone that the programs calculate, and it's taking off of it's taking off of this bar and that bar. Volume on that one's 9.8. You did 7.2. You also had this huge volume bar over here. You couldn't even, you can't even get into the weaker one, much less the stronger one. That's a failure. XLF. Let's see what our financials did. Now the XLF has actually been leading us back down. They were the strongest all the way up. If we go over and look at a weekly, you can see just how strong they've been. The XLF gets into resistance, and this is the Thursday bar again from a week past. That was the breakdown bar off the highs. On the XLF, it was quite clear where it was. You went into it, you got no volume, you fell, you're coming back the other way. XLI. Now maybe the Dow is weak. XLI hasn't been as bad, but the XLI goes into resistance. Doesn't have the volume. You can look right across here at the anchor bars in blue. They're telling you where volume was, what's important. They give you significance, right? So what you always want to see is, what does the test look like into significance? In this case, failure. How many more? XLK. These are all the major sectors I look at. I look at them. Why? Because they give me an indication of what the market wants to do. So the Thursday bar down, that bar really extends up to the highs, right? I mean, that's a gap down. So really it extends all the way back up to wherever the close was the prior day. But you can see resistance here. The anchors don't have the volume, so the volume really is off of this bar. 7 million, you did 6.7, failure. XLP, these guys got hammered today. Now what's interesting is now the situation on what used to be, you know, the trade of the year, I guess, right? Stodgy consumer staples. I mean, you go back and look at a chart of these things. Oops, wrong chart. I grabbed the wrong thing here. Go back and look at a chart of this. This run to start the year, straight up, folks, it was ridiculous. 35. That's a $7 move on a $35 base. That's 20% on things like Kellogg's and Hunt's, and I mean, come on, what are we talking about? We're talking about stuff that should move 2%. Why? Well, because they pay a dividend, and we couldn't get money on dividends anywhere else. Now what are they doing? They're taking them back down, right? Nothing's for free, folks. Nothing's for free. They're going to come back down and they're going to test this area. That's where they're going. This is the first one now to set up the ABCD down on the way back. We talked about it only takes, you know, one or two. You're getting it here. If you break over here, you're going to get it on the weeklies. That will be the first one to break on the weeklies if in fact that happens. That would be a you know, it only takes a couple, 2 or 3 of them, and they all go. So something to keep your eye on. XLU, let's see how they did. This is like a mirror image of that one, but it's not nearly as bad today. So it goes into resistance, fails. It's going to come back down. We don't have one sector. The only one that looked good was the healthcare, which is here, and that was primarily as a result of Amgen pushing this guy 50.18, and you know, some money coming into the drug companies, I suspect. 50.17 was the high. Yeah, so that's not a clean failure, but that's pretty close to a failure. And the last one, Staples. I mean the discretionary. Let's see what they did. That's a failure, right? You had a huge bar down. You go into it, you got nothing. That's a failure. That's a clean failure. So you're going back in. In some of these cases, you're coming back into your swing point lows. That's retest, regenerate, back the other way. So you're seeing it fairly clearly here. All your sectors, your indexes, folks, we got our bounce. That was your bounce. If you didn't do something on the bounce, shame on you, because more than likely that was your escape ticket. Let's look at the OX markets and see what those are. Okay, so let's start with the bonds. The bonds have been trying to push up. Now, what's interesting is bonds have been trying to put in for a long time now, trying to put in some sort of a quote-unquote bottom. This is their best shot this time because you can see volume coming into them finally. Folks, if you've been trying to buy this, you had to be patient, and you had to be, you know, stabbing and jabbing and you know, getting out. In other words, if you bought support here and it failed, like at this case, then you had to be patient, let it come back up and get the heck out of the way, right? When it broke again, if you bought again, you had to wait. And now you're back up and you're going to have to get out again, right? If you just held in here. But the one thing that's different that we haven't seen for 6 months is that now you actually had money come into these. Why would money come into them? Well, because the interest rate's higher. Where the interest rates are a little bit more interesting, and you see the money escaping stocks that pay dividends because there's actually risk in stocks. Now, there's risk in bonds too, but people don't typically look at it that way. And if you hold them to maturity, then it doesn't matter. But 10-year notes, these guys, I mean the 20-year bonds got a nice bounce again today, so they're going back into this low. Let's see, that low has a price point of 105. We got to 104.89. We don't have the volume. Tomorrow will be the attempt to do the retest, regenerate lower. My take on this is you're going to see money escape from stocks if in fact we start to get a decent retrace and the bonds push up higher than people expect, because they will be kind of a safety play on the way back up. That should be true of the dollar too. Let's take a look at the dollar next. So if we look at the dollar, okay, so the dollar does a doji on nothing. Well, that doesn't tell me anything. Let's look at the FXE. There's nothing here. Nothing here on any of these. Currencies aren't telling us anything. My expectation, though, is if the market starts to push lower, you're going to see money run to the dollar. And that will be where the bounce comes from in the dollar if it happens. Let's go look at gold. Gold tried to push lower today, but wouldn't sell off. Actually ended up higher. Less volume, but you're over the highs and you held it. Let's see, is it getting over this swing point high? 134.60, and we're clearly over that guy. We're coming into the last one on this time frame. Volume there is 9.8. You're doing 7.6. The low is 134.98, and we're hitting it with 135.60. Closed at 130. So we're into the bar. If they can stay here tomorrow, they're gonna test the top. That top is 137.62. Let's pull over and look at the weekly. Okay, so the top on the big bar weekly is 136.75, and that still looks to be the target, and it's going right into resistance now. We had an ABCD off the bottom. Let's measure that real quick. 116.74. That's about 14, about 13 onto that gives you about 140. That would get you right up to that bar, right into that bar, over the bar, right? 140 would take you right to the top of resistance, which would be a swing point high. I don't know if it's going to do it or not, because I believe that bar is going to give it trouble. So I would be looking at 136.75 if you're in this market long. You might be very careful as it hits up into that area. Let's see what silver did, because I saw gold was up a little bit again after hours, another $4 or so. All right, silver is already over the highs on this time frame. Let's pull it over and look at the weekly here. And it's over that big bar. So silver's telling you that you can move higher on gold. I don't know if I trust it, but that's where it is. So swing point high, 2370, 2356 today. Well, there's your test. That's going to be the final test. So we did 15. Multiply that by 5. That's going to give you 75, which is just about the same volume. So that's going to be a good test. So it looks like the metals to me, this is the week. This is the week where they either really start to accelerate, or we're going to finally see them try to pull back. My guess is they will try to pull back, but they've done what they had to do. Short term, you're definitely on the bullish side on silver. Intermediate term on silver, you actually have a good situation where the trend is what I'm trying to say. The trend has changed to sideways. That needed to happen. It finally did happen. So if we look at the trends now, we're still bearish long term, but you've got a sideways trend on the short term, and now you're going to get a real test of whether these metals can really push higher or not. Let's take a quick look at a couple other things, and then I'll come back and look at what questions you have. I have a little time tonight, so if you have questions, pop them in, and I'll do that. As you know, I'm starting to archive these guys being the recordings over on YouTube, so do check it out anytime, anywhere. It makes it easy for you on mobile devices. And in case you don't realize it, the TA Today site itself is somewhat mobile friendly. You can come into TA Today, and those menus at the top, the charts all show up for you. So if you need to look at charts intraday or after hours, you can pop into those on TA Today as well using your mobile device. Okay, so USO pushing back towards the top. Volume's not bad either, huh? It still looks to me like it's just going to hang there. I don't think it's going to get over resistance. Let's look at the JJC copper. So China has been, China was up about 2% last night, and JJC is not doing anything. And that is what has been pushing on the XLB, Australia, other commodity-centric markets. But I don't know if it's going to be enough for those guys. Here's the junk bonds. Junk bonds fell, just like all the indexes, fell at resistance. It looks pretty clear to me we're going to try to head back down tomorrow. If in fact this market can hold up tomorrow, I'll be impressed. Okay, let's see what your questions are here. What's your suggestions shorting the markets? And then there's a follow-up question. The drop at 3 p.m. was apparently due to Kerry's Syria speech. No, we're not going to bounce at the open. I don't believe. I believe you're going to see this market flat to lower in the morning. You know, I see the headlines. I mean, I can't help but see the headlines because I read everything. I don't watch CNBC. I don't watch anything on TV. So I'm kind of innocuous to the talking heads on the television. I guess maybe if they invite me on, then I might have to start watching them. But they're always, I mean, here, think about it this way. Have you ever seen a day where we don't attribute the markets, move up or down to some sort of news event, to some sort of economic data, to some sort of, whatever? They have to, our minds want a reason. That's the way we operate. And so they're always going to tell you that it was because of this or because of that. Was it really? Do we know that? I don't think we know that. And I don't think we can know that. It's just speculation as to what it is. And honestly, it doesn't really matter. What matters is, do the buyers show up at critical points? Or do the sellers, or vice versa, right? And we had critical areas that we were messing with today. We were coming into resistance the first time back on a bounce, and we went into those areas with no volume, not only on the indexes themselves, but on all the sectors. It's a pretty clean route, if you will, telling you that the buyers are unwilling to step up at a point where we should see sellers step up. What should we see? We should see price have difficulty. What did we see happen? That's exactly what happened. Okay, that's an indication that that area is for real, and that the sellers are going to be more powerful than the buyers at this point in time. And that is a clue, and that's what we're always looking for. So I don't think we're going to see the market bounce off of the carry nonsense. I don't know that it's really true to begin with. Let's look at ASPS. Now this is a company I had been invested in for probably almost 2 years. I sold them out somewhere around about 100, 110 or something, a long time ago actually. And they had proceeded to run right back up. Let's see what they look like. I haven't looked at them recently. So they're up there testing the highs now. And if we look at the weekly, that is the weekly highs as well. So let's see what the volumes are here. So the first thing you want to look at when you're looking at something like this, right, is you come off a high. That's a pretty big move, folks. That's from 131 to 66. That's 40%, 40 to 45% or so. Now you come all the way back up, and you're right back up there. So you got essentially an 80% gain or something, right? Because that's the way the math works when you're doing this stuff. But what do? You come back up and look at the volumes here compared to what you saw spike on the way up. 129.72 is the high on the weekly. We've got over that high 3 times now. We actually got over it here, suspect. We've done retest, and we're trying to regenerate higher. On the weekly, we'd have to come all the way back down to 107.88, right, to get a full retest regen, which is that next support level. Okay, so that's what the weekly looks like. Let's go look at the daily, though. So on a daily perspective, so first of all, you don't have the volume, and it's not surprising that you're struggling at those highs on the weekly. Now, on the daily, it looks wonderful, right? You got all this nice big push, but remember, this looks a lot different than what you just saw on the weekly. On the weekly, it looked even more fantastic. So now we're up there pushing. We're pushing. We had this was the breakout, no volume. We pulled down. We push back up with decent volume again. Yeah, it doesn't look bad. It looks to me like it's going to try to build a base and break higher. Now, the only thing I would be concerned about is on that weekly, you've got the potential to trade back as low as 107, which is way back here. So if you're going to trade something like this, you've got good volume support. This is a good support zone here and there, right? It came into that, it held first time. That's what it should do. That's exactly what it did do. Then you got to spike back up. I don't know what the short interest is in this. We can look at it real quick because that's a big piece of this. Let me pop up the trading cube, put it in, and see what the short interest looks like, because I suspect what you're actually seeing here is short covering. No, it's only 110, so that's really not what's happening either. So it looks like it's real buyers then. So if you want to trade this thing, what you got to do is you got to try to catch it, and I suspect you're going to get another pull back down into here. You got to buy it towards the bottom of this range that has developed, and put your stop right up underneath it. Just give it nothing. If it falls from there, then you want to look at the next spot to try to get in, and that's the way you have to trade this. Now, the problem with that, of course, is your risk of the trade going awry, even though the stock is going to continue higher potentially. Your risk of getting stopped out is higher, right? So there's always 3 things you're looking at: reward to risk, which is what everybody looks at, the probability of success on the trade, and your entry at such a point that you're not going to be sitting there forever. So, I mean, to me, those are the 3 key things that you have to look at. Your reward to risk will be great if you buy down in here. Your probability of success not going to be nearly as high because you can get stopped out. The beta's high on this thing. If you buy it down here, then it's, your timing is going to be good. So that part of it's good. All right, so quick summary. What do we got? We got a market that came into resistance and it failed. It fell right at resistance, right where would you expect it to fail. That tells me that tomorrow you're going to see this market struggle and try to work back lower. If it does something different than that, well, we'll have to evaluate what that is. We do have a huge Fed operation tomorrow. That's going to support it to some degree. If this market sells off into the Fed buys of $5 billion tomorrow, well, that's telling you something as well, right? Because you go back and look at every Tuesday this year, almost every one of them have been up, and almost every one of them have seen $4 and $5 billion of Fed money coming into the market on a Tuesday. So that correlation is pretty high. Tomorrow will be a good test of that. I expect this market's going to go back down. Don't get too comfortable on the long side. And if you get an escape and you're way too long, you probably should use it. And, I'm not saying sell everything. Long term, here, let me quickly, I don't want to give the wrong impression. So let me back up just real quick and show you what I'm talking about before I leave. So I'm going to bring the SPX back up. and I'm going to zero back in one more time real quick. I'm talking about a short-term trade that could take you back down into this area. If I flip over and I look at the weeklies, okay, different story, right? Got a lot of support down here. It doesn't look nearly as bad here. Yeah, you can get a retrace back down into the 1610 area, but that's not the end of the world, folks. There's volume down there from about 1620 back to 1560. The 1620, 1610 that we're measuring on the ABCD is right in here. That's good support. So yeah, we can get a move down. It will be an ABCD down that will take us down. Matter of fact, we got one here, 1709. That's about 8. That's about 70. If this is the top, that would take you to 16 on this one. And you can see that's the bottom support. That's where it should hold. That's going to be the better buy than now. So if you get a retrace, that's where you want to buy. You want to buy down here somewhere. You don't want to buy up here. Will it happen? Well, we don't know that. We'll have to see how it handles the B point on the way back and if it really tries to break. I suspect that's what's coming. So when I tell you, do you want to sell out up here? Well, you're at 1670, potentially looking at 1600. That's what I'm talking about. Adjust yourself accordingly based on those parameters. Have yourself a great night as well. Folks, I appreciate you being there. Tell a friend, tell two. Help us help you. I'm L.A. Little. This is and was your daily TA wrap. I'll see you here tomorrow. We'll do it all again. Have a great night. Until then, take care.